Make sense? Okay. Okay, goodwill. Goodwill has two definitions. Who can define what goodwill is? Well, I wouldn't quite say it in that manner, okay, but we could. Goodwill, typically people think is like my customer base or my employees or, you know, my reputation or stuff like that. Those are kind of intangibles in the company. Those intangibles should translate to revenue and net income, right? And we're going to talk about intellectual property coming up. The other goodwill is, have you ever bought a company that had goodwill sitting on the balance sheet? Do you know what that is?
The last guy's hairball.
I wouldn't quite describe it as my cat's fur ball, but what happens if you buy a company, the accountants balance what you paid for versus what the assets are worth. That becomes goodwill on the balance sheet, right? It's a balancing gap activity. So let's say your balance sheet was worth $1 million and you got $2 million, you'd have $1 million sitting there as goodwill. That's all it is. It's a balancing account. Now the goodwill that you're talking about in operations, frankly, if it doesn't translate to revenue, it's not really much goodwill. I mean, I have a great customer base. Well, the customer base is going to translate into revenue and net income. So all that goodwill, to me, means nothing unless you are getting revenue and net income. Make sense? And we're going to cover intellectual property at the same time. So the thing about intellectual property is, first let's define, what is intellectual property? Patents. Trademarks. Copyrights and trade secrets. So Coca-Cola has existed for lots of years on a formula that nobody seems to be able to duplicate. 5 people at one point were the only people that knew the formula of Coke. So you can have a black box trade secrets, right? You can have patents, you can have trademarks, you can have copyright. And so where does that sit on your balance sheet? Typically, if I hire a legal company to give me a patent and it costs me 50 grand, on my balance sheet it says patents, 50 grand. It's because that's what I paid. Again, what do you think the value of that patent is worth? Huh? Exactly. So what you would have to say is, I would look at your competitors and say, do you have a higher market share? You should have a higher market share if you have a patent and your other people don't, because you have a feature set that you should be able to sell into the market. That would translate into market share or higher revenue proportionally.
But does your terminal value though?
Huh?
Would that increase your terminal value?
Only if it translates to revenue and net income. You see, just to have a patent, the value is barely what sits on your balance sheet, okay, that you paid the attorney, unless you're using it to create market share.
So then why does Google go buy these company costs $1 million for $300 million so they can pick up, you know, a certain search engine optimization tool that company's making $1 million off it that Google's willing to pay $300 million?
Okay, so this is the secret. This is the secret question. I'm Google and I have $5 billion in the bank, or whatever I got in the bank, okay? And I go buy somebody who has no revenue and I pay $1 billion for them. Why? Huh?
Because you're going to do something with that, scale it.
Possibly you can take their intellectual property and it's going to give you market share, or you're going to buy it because it's a competitor, so you're going to put it on the shelf. By the way, the automobile industry has done that for years and years and years. Bought technology and put it on the shelf so that they could maintain their parts business or whatever the case may be, okay? So there's a strategic value in eliminating a competitor or taking that technology with your engine and put it into 50 million users, and now what does that new technology do? Now it can go somewhere, right? So a lot of those mergers that you hear about that make no financial sense at all, you'd have to be in the boardroom and listening to the strategic reason why they're buying it. But intellectual property in itself has no value unless it translates to market share, revenue, and net income. Does that make sense?